All right, so there's a lot going on right now when it comes to taxation and crypto. So much so that I had a conversation with an accountant on January the 18th. I posted the full length conversation to the channel. It's about an hour long. If you do want to go watch the full thing, there is a card up here which I'm going to link to it that you can click to go watch it. But what I thought I'd do in this video is highlight an excerpt from that conversation and highlight a tool that will help you address the main issue that the accountant Chris Etherington was alluding to in that conversation. That's what we're going to do in this video. So within crypto assets, so we know that things like, income tax, capital gains, those are probably the common ones that people know of. Yep. But what taxes are actually due specifically on crypto assets as they stand today in your field?
So the vast majority of people will be subject to capital gains tax, which is the tax that you pay when you buy and sell things, ultimately. And it's very similar rules in terms of the capital gains tax regime as it is for stocks and shares. So for anybody that doesn't hold their shares in the ISA and does pay tax, then it's those rules that will apply. And how HMRC interpret it, very simply, is that if you bought something for X price and sold it for Y, the difference between them is your chargeable gain. And that can be subject to tax at 20%. It can be 10% if you're a basic rate taxpayer and you don't have much other income. But if you had an income and you were a higher rate taxpayer, then it's definitely going to be 20. Now, every person gets what's known as an annual exemption from capital gains tax. And that's at the moment £12,300. So you can make gains up to that amount each year, and there wouldn't be any capital gains tax to worry about. So if we're looking at the vast majority of people, they may not have a liability to worry about, and they may not even need to declare anything to HMRC. What you want to do is make sure you can defend that position, and keep records and be able to justify that. And if any HMRC did ever come, then you can say, look, no, my gains were well below, and I didn't need to worry about submitting a tax return. What tends to happen, I think, and this is it's a certain demographic of going back to the demographics of who's investing in this. If you are, say, in your 30s, 40s, and you're doing a tax return anyway, let's say you started getting investment income from different sources of rental property, for example, you can quite easily still need to declare all your crypto gains to HMRC, even if you don't have a liability. And that's where the admin side can become quite complicated. Now, the rules, how they work for that are that because you've got this 12,300 allowance each year, they say you can make disposals of any asset as long as it's lower than 4 times that annual exemption. So just over 49 grand broadly. If I've got £1,000 in crypto and I make 50 odd transactions in a year, well, those are, I've been buying and selling, and I've got 50 grand's worth of proceeds during that year because of the 50 transactions. And therefore I need to disclose all of that on a tax return to HMRC. Administrative nightmare doing all of this, by the way.
And this is an interesting point, because I've had people say to me, and I've seen this in the comment section as well, I think if you're simply buying crypto and you're holding it, that's one thing. But I know people who have done a shed load of transactions by trading. And they're completely in the dark as to, do I need to report it? How does it actually work in terms of, well, I would have made a loss on some of them, I would have made a gain on some of the transactions. But when you're trading, there needs to be much, much more attention paid to the tax side to it, because you are trading and those transactions rack up over time.
Yeah. And I guess the question there is, there's trading for crypto purposes. A lot of people refer to themselves as a crypto trader. It's different for tax purposes. So if I was doing this in relation to stocks and shares, if I was day trading and buying and selling things on a reasonably regular basis, would I be treated as having a trade for income tax purposes? Probably not, is the straightforward answer. It's quite complicated, this, to be honest with you, and this is where a few people could get tripped up. I think HMRC's starting point is likely to be still that most people are subject to capital gains tax, even if they're frequently trading, because this is the nature of crypto ultimately. I mean, a lot of people could be doing hundreds, thousands of trades a year.
Yeah.
There are obviously hodlers and people who hang on to their investment and so on, but there's a lot of people who come in and out of a market because it's so volatile, and you might have even automated bots that help you do that, and I think where you've got to look at this slightly differently to other asset classes and other activities that people do. Yeah, so what we're doing is we're looking at the legislation and we're looking at case law as to try and determine whether you're trading for income tax purposes or not. And there's something called the badges of trade, which you have to look at. And these are sort of like set out in case law as to these are sort of activities that we'd expect somebody to be demonstrating if they were undertaking a trade. And then we've got to apply that to cryptocurrency. So it would be things like, okay, well, what sort of experience have you got? Yeah, are you a professional cryptocurrency trader? Have you worked at exchanges and stuff like that? How have you funded this originally? Is it from your own money? Have you taken money from somebody else? Do you have a business plan? Is there like a proper plan in place, a strategy to make profits? Is it automated? How much time do you spend on it? All of these factors and frequency of transactions, and put those all into a melting pot, and you've got to try and balance up, okay, well, am I trading or am I not? And there's a lot of case law out there in relation to stocks and shares where individuals were spending a lot of time on crypto, or not crypto, on their stocks and shares rather, and did have experience and were found to be effectively acting professionally and trading. On the other side of it, there are quite a lot of people who still had quite a lot of frequency in terms of what they were doing each year, in terms of the number of stocks and shares. We're talking probably 200-300, and that we've got to compare like with like. This is apples and pears, isn't it? You wouldn't expect somebody to be doing thousands of trades with stocks and shares ordinarily, but it's not unusual with crypto. So putting that sort of case law in place and overlaying it into the crypto arena, I think it's reasonable to say that if somebody is making a lot of trades but isn't necessarily spending a lot of time doing it, and there isn't a lot of money at stake, and I think a key factor is, are you doing this in a way that is professional and can be seen as a business and maybe managing money on behalf of other people? Those are sort of factors that can really tip it into that trading arena. If you are buying and selling for yourself and it's with your own funds, then I still think HMRC's view is likely to be that it's capital gains tax rather than income tax. And that may be motivated by the fact they don't want people to have the losses, because there are probably going to be a lot of people out there who are doing lots of frequent trades, but actually aren't making themselves. I can include myself in that number. And HMRC aren't particularly inclined to let people have income tax losses, because those are like the most favourable losses you can get, really, because you can set them off against all sorts of other income and gains potentially as well. So that's where we stand. And I think it's important that if somebody is doing a lot of trades, that they figure out what their status is, and they probably need to get proper advice on that rather than trying to figure it out for themselves. It's unlikely HMRC are going to give you a view on it. You can potentially write to them and ask them to give you a view. I'd expect them probably to come down on a similar stance. They don't tend to like to get off the fence on that sort of thing, and it's a question of fact.
All right, so Chris made some interesting points in this clip. He talked about the badges of trade, and I think that if you are in the crypto space right now and you're disposing of cryptos or trading cryptos or swapping them for other coins, then it's really important that you are able to keep track of what you're actually disposing of at any given time, because as you know, a disposal effectively is a tax event. It means you then got to pay tax on that. Now, within the badges of trade that Chris mentioned there, it is likely that most people won't be categorized as traders. So in reality, most people will be subject to capital gains tax. But I think just to be safe, it's worthwhile just exploring maybe some tools to help you keep track of all of your disposals, all of your trades, so that you've got data there just to cover yourself in case HMRC guidelines change later on in the future, or something becomes apparent that we weren't aware of right now. So I had a look at a couple of tools. There is one in particular that I like, and actually people have been mentioning in the comment section to that video and others that I've done, and that is Coinly. So Coinly is relatively easy to do. They've got a lot of connections to a ton of exchanges. So it doesn't matter who you're using, they're likely on the list. You've got Binance, you've got Crypto.com, you've got Gemini, you've got eToro on there, you've got Coinbase. There's a whole host of them on there. I think Kraken's on there as well. But essentially what you do is you connect your account, or you can import a CSV file. So really, really easy to use. It's got a massive, massive list of exchanges you can actually connect to. I haven't set myself up on those just yet. I have signed up, but I'm not connected my accounts. I think I know where I'm going to be when it comes to my capital gains altogether in terms of what I hold personally. But I might actually do a video in the coming weeks specifically around Coinly and maybe 2 or 3 other providers that are in this arena on the tax side to crypto, just to help, so that you've got maybe a little bit of an overview of them. But I hope that you found this useful. Hopefully it has been informative. If you do have any questions, obviously just let us know in the comment section below. But until next time, I'll catch you later on.